Ladies and gentlemen, welcome to Bigger Than Race, exposure to all things truth, whether you like it or not, with unique perspectives from different beings from all walks of life. This is Bigger Than Race. Investigate truth on your own terms.
Okay, so how is everyone's week so far?
Good. Yours?
Mine is well. It's okay if I could say that, but it's good nevertheless. Anything interesting happened this week, or something you guys saw, met someone interesting and stuff? Okay, so I'm gonna start now. I think it's gone over 2 minutes. Yeah, I'm gonna start now. Okay, so thank you everyone for joining me today for today's session. Usually I do it on Fridays, but unfortunately I have an engagement that I have to go to this week. So that's why I have to do it today. Yeah, so that is why I'm doing the meeting today. So starting off with today's, or should I say Monday's stuff or news. Okay, so for this week on Monday, according to CNBC, we got via OPEC to cut more oil barrels in July. I believe that it's about 1.16 million barrels. Okay, so that will start to be, they will start cutting that next month in July. I believe that they started cutting barrels of oil starting last year, and I believe the total amount is close to 4 million barrels that they're cutting per day in production, going right into the end of, till the end of this year. So I believe that most likely either inflation is going to stay sticky, or they'll revise that, or whatever, however they calculate this stuff in any case. Okay, so the dollar finished off 104.31. That's very strong. VIX finished on 15.12. That's okayish. The 10-year yield finished on 3.75 basis points, which is quite high. Just to let you know that if the 10-year yield goes over 4, you can see a very volatile market, if I could say. Okay, and then as we all know, Apple released a new VR glasses, and the Apple stock reached an all-time high. And for those who have watched the showcase, it was quite, I enjoyed watching it, to be honest with you. And as Brando has been saying, the trend VR, XR, and AR, that basically Apple is just showing you the trends as to what's going to be popping this year. Basically, not only in the stock market, but in crypto as well, because we know that the technology, everything is going digital, everything is going software. So yeah, so basically it was quite a nice showcase, and I believe that people's reactions to the price of the glasses was like shocking. I believe it was $34.99, $3,499 Okay, so then as we know that the Treasury, this whole story with the debt ceiling, that's over. Janet Yellen was yelling for nothing, she was panicking. Everything was sorted out. So according to the site, according to the Fed's FRED, F-R-E-D site, within the month of June, before June could end, the Treasury would issue new T-bills between that are valued at between 500 to about 500 billion to $1 trillion, which is quite. I have to admit that's quite excessive and quite quick. Usually it takes about 3-4 months, but maybe they need the cash. Who knows? Then we have Carl Icahn. Carl Icahn is a billionaire, for those who do not know. And he started buying, he bought over $30 million worth of ticker symbol SWX. Now that is a gas company. As I showed you last week, Warren Buffett bought couple billions, not couple billions, about $25 million worth of Occidental shares, which is also a gas company, which is not a coincidence because as I just announced or read that OPEC is cutting out oil barrels in July. So they see an uptick in oil prices, and the WTI, which is the Western Texan index for oil, that's how they price in oil, and that is the trend that they are seeing as as smart money. That's what smart money is seeing. Okay, and then we got big banks that are selling commercial loans and MBS. MBS stands for mortgage-backed securities. For those who do not know, that is the very thing that caused the 2008 financial crisis. So now the big banks are selling commercial loans at losses. I can understand as to why they're doing that, because probably they foresee maybe future rate hikes, maybe not. I'm not going to even predict that. And they want to get rid of it because nobody is, with interest rates at this level, nobody is actually borrowing, especially at big businesses. Nobody's borrowing money at these rates to expand business and stuff. Everyone is just being cautious and stuff like that. And Elon Musk, in one of his tweets, he did state that commercial property will be a huge problem. And ironically, on yesterday, on CNBC, I think it was with Andrew, Janet Yellen did state that the commercial real estate will be an issue. Big banks will be selling commercial loans at losses, and those are her words. She also said that they will be paying. So as we can see, real estate is going down, but mainly the commercial side, because families, most people cannot afford to buy houses. So I think most people are seeing that renting is much more, it's a much better option. Okay, so on Tuesday, the dollar finished at 104.15, slightly higher. The VIX dropped to 14.04. The 10-year yield dropped slightly it actually rose from 3.61 to 3.70. And then we had the drama with the SEC, where they sued Coinbase. And just to prove that is a, how would I say, all smoke and mirrors, and that was planned. The moment that the SEC sued Coinbase, about 2 or 3 hours later, 10 US states filed a lawsuit against Coinbase. And you don't get any more what you call all planned out sort of thing. They knew, and we all know it's a show. And I will show you just now where, even prior to this SEC lawsuit with Coinbase, Brian Armstrong sold a nice good chunk of Coinbase shares just before the day Coinbase could get sued. Okay, so Wednesday, the real estate. So basically, on Wednesday, the Treasury did come out and say that they were going to start issuing bills. Apparently, they have issued 425 billion T-bills. So I think they have issued, but I think they're gonna do it like in stages, like where they're gonna start cashing it at certain rates and stuff. So just to give you an understanding of how this Treasury general account works, whenever the Treasury general account goes in a downtrend, the stock market always goes in a uptrend. And whenever the stock market goes in a downtrend, the Treasury general account goes in an uptrend. It's like this. If they move money into Treasury bills, the stock, which is buying longer term, such as the 10-year yield, then stock market goes up, because in order to buy stocks, the money has to first flow through debt. They have to first buy debt to prop up the market and stuff. And when they want to bring the market low, they sell those treasury bills, and that's where you see an uptick in the yields and stuff. Okay, so the dollar finished at 104.17. The VIX finished exactly 14, so it's gone down. The 10-year yield picked up a bit. It finished at 3.78, so it has picked up a bit over there. Then China has a lowered interest for those who save in dollars. So basically, they gave instructions to Chinese banks to lower the interest for USD denominated savings account, and to pick up the savings interest in the Chinese dominated currency in those accounts. So basically, what they're trying to do is they're trying to lower the reliance and investments done in dollars. Okay, then we saw an uptick in employment. The expectation was 3.5, but it came in at 3.7. The Nasdaq actually went down for the first time, and also the S&P finished or closed below 4,300. And then today, during the day, we got news that apparently the Eurozone entered a recession. For those who do not know, the Eurozone includes Germany, Italy, Malta, Slovakia, and all those countries. Job losses came in higher as well. If you look at the past 6 months, job losses were actually came in below expectations, and that gave an uptick to the market. And even though job losses came in higher, the market still went up. So basically, it was forecasted at 235,000 job losses. The actual was 261,000, and the previous was 232. So it came in about 39,000 more than expected. Okay, so just to give you a heads up in what's going on, from what I see personally, I see a lot of talking about the traditional markets, of course. I see a lot of complacency. I see people just throwing money into into the Nasdaq and stuff like that. And not to say that it can't go up or things like that, but when a market has been going up, especially like for about a three-month period or so, there comes a time where you gotta sit and think, and you know what, this market needs a little bit of a break, a breather, before we can continue up. Because as we all know, the debt does not get you cannot stop issuing debt. You gotta keep issuing debt. They gotta keep printing money. So then there comes time where you gotta take a chill pill and then go up from there. As we saw, three stocks that actually reached the all-time high. We had McDonald's around February, March, actually March, 6th of March. On the 6th of March, it reached its all-time high. Based on that, they launched new restaurants where it was fully automated. So as we can see, the fourth industrial revolution slowly coming in. We saw Nvidia, also reach all-time highs. And we saw like what they were doing with AI, software, GPUs, and stuff. I believe that someone posted the video in the group. You can watch that, where the CEO talks about kudos, cloud computing. And then also we had a crypto project called Space Chain even partnered with them. So that tells you, that Nvidia is the future and stuff like that. And then we just had recently, as I mentioned, we had Apple reach all-time highs based on the new product, which is the new VR glasses. And that is to show you that the metaverse trend, a lot of people said that, Meta, or used to be known as Facebook, they threw billions away at a stupid project or something like that. But this is to show you that the metaverse, the technology is still alive and well, and it's still being built. Some of them are actually almost ready. So that is to show what are the trends and where you want to be in, because as we know, a lot of countries are now entering recessions and stuff, and it wouldn't take long for the US. Why would I say that? It's because China is not doing too well in its production as well. In fact, it's gone in a downtrend in terms of manufacturing. So there's less goods being manufactured, and with that, with supply chains and all these other issues, that increases prices, and less people, you in an inflation environment, you got to choose, what are your real needs and what is considered luxury. So it wouldn't take long for the US to enter a recession. That's my point, or my view, because the US does not produce most of its good. It's mostly a consumption-based sort of economy. So with that being said, if you don't have a lot of people buying things on a continuously basis, the economy can drop, because the flow of money is the blood of the economy. If the flow of money is not flowing through the body of the economy, then you are going to have issues and stuff. So when that could happen, it could possibly happen this year. I wouldn't be surprised, honestly. It's just that it's what really makes me feel that it could happen this year is that it's so ironic that for the past 6 months, unemployment was beating expectations, and then all of a sudden this month, we having the treasury withdraw liquidity from the system and stuff, and then all of a sudden you get news as to where unemployment has ticked up, and then you get job losses on the increase as well. So that is a little bit of an irony. And I just want to know, what do you guys think or feel about that? From wherever you are, from whatever city or town you're from, how are you seeing or feeling things in terms of your wherever you stay, the economy and such?
I'm in Vegas, and I have a routine a little bit because I take my mom in for appointments, and then a lot of times I stop at Costco in the evening. Used to really suffer to look for a parking spot close for her. After she had a stroke, I try to get right up front. All the handicaps always taken, blah, blah, blah. But in the last 3 weeks to a month, I would say there's same time, like about 6:37 in the evening, they close at 8:30. There's 20, 30 parking spots in the same route that we pull in and go. I mean, you can totally see the lack of people in there from what was there. Same days of the week. In Home Depot and Lowe's, I have a bunch of rental properties and do a lot of repairs myself, but I'm at Home Depot a lot and Lowe's, and I was at Home Depot yesterday. It was a ghost town at 2, 3 in the afternoon. I mean, in a sense, there was way more workers in there than there was people shopping. And it's been like that the last 2 weeks, the 3 or 4 times I've been there. I mean, I've noticed they've knocked down some of their tool prices and stuff by like 15-20%. Just a straight markdown on a lot of that stuff probably about a month ago. But I totally see it a lot of these big box stores. It's not just a trend slowing majorly. But I don't know if did you happen to catch that video of Jerome Powell like in 2011 talking about how when the stock market goes down, then the treasury market and bond market go up. Basically saying that they end up crashing the stock market to bring that up. But he wasn't part of nothing, the Fed or nothing. It was back in like 2011. I caught it on somebody's channel, and it was real interesting how he explained it like that, kind of nonchalantly. And he was just, if you read into it, it's basically saying that they'll pull the stock market down to get the freaking bond market and treasury market up if that's what they need to do. Is the way I interpret it, and most of these other people that were talking about it.
Yeah, I've seen that video that you're talking about. I think it was Crypto Teacher who put it in one of his videos. Not this year. I think it was one of his videos that he posted last year and stuff. But I've definitely I know what you're talking about. Which video? But what Jerome Powell said is basically it's basic, indicators of how the stock market works. Like if stocks are down, then you will see the yields up, especially the ones I will show you now. Let me just quickly change my let me just share my screen, then you can see what I'm talking about. Okay, can everyone see my laptop screen over here?
Yeah.
Yes, no. Cool.
Yeah.
Okay, so basically what Jerome Powell is explaining, as you can see over here, you got 1 month, you got 2 months, you got the 7-year, the 10-year yield, the 20 and the 30 over here. And as you can see, this is the yield at which they are yielding or what they are generating. Now, you don't need to be you don't have to like know anything about economics to know that there is definitely something wrong over here. You may ask, what is wrong? Well, look at the 1 month over here. It's yielding about 0.86%. And then look at the 10-year, which is yielding at 3.718. So, as I said last week, Warren Buffett bought last year, December, into the 1 month. And that was a smart move, because when the stock market and crypto started to take off in January, between the 1 month to the, let's say, the third year, all of this went up in yields. That means, imagine in 1 month you can make 5%, and yet if you put your money for 10 years, you're only going to make 3%, which doesn't make any sense. But that's what happened. So the front end actually went up, and then from the 5 to the 30 year, it went down. It's still down, but it has picked up in the past few weeks. And so basically, he put about $95 billion into the 1 month treasury. So let's say hypothetically he was yielding at just straight 5%. Okay, I'm just going to make it simple for myself. Basically, with $95 billion, he was getting about roughly, say, about $4.95 billion a month, just for sticking your money in a 1 month yield. So 5 times 6, that gives you about 30. So that's about $30 billion for sticking it up there. So what Jerome Powell is saying is that when the stock market goes down, yields go up. Which yields is he talking about? He's talking about from the 5-year yield to the 30-year yield. But we mostly look at the 10-year yield over here. Let me just show you there. We mostly look at this 10-year yield, and the reason for that is a indicator for how well the economy is doing, and the confidence of investors in the stock market. So basically, if the 10-year yield is going up, stock market goes down, because that scares investors away. They are basically, in their mind, they are saying that, hey, Fed is not buying anything. No liquidity is coming in. Let's sell, and you'll see everything goes down. But if the 10-year yield goes down in number, investors say, okay, you know what? Fresh money is coming in. Let's start buying, and that's how it works, basically. So that's what Jerome Powell said. But there's a lot of things that they don't tell you. And what he said in that video was very profound, because we saw in 2020, when everything spiked up and the market went down, we saw how fast they were to approve certain legislation and start pumping money into the economy. And the same thing that's going to happen in the near future. I don't know when. I don't know. I can probably guess how. But most likely with this treasury thing, with this debt crisis, they are going to withdraw liquidity. By withdrawing, they may not raise rates, but by withdrawing liquidity, they are doing quantitative tightening, because this past 6 months, when Jerome was raising rates, you're supposed to go down a bit, because you're telling the market, hey, we withdrawing liquidity because we need to fight inflation. But what Janet Yellen was doing, because she took $1 trillion out of the retirement account, she was offsetting what Jerome Powell was doing. So Jerome could say, hey, we are taking away $10 billion or $50 billion out of the market. But Janet Yellen is like, you know what, let's pump it to infinity, or how much $1 trillion can last us. So that's basically what she was doing. And stuff like that. Let me just come out. Yeah, so basically that's what she was doing. And now that they withdrawing the $1 trillion out, I don't think they're gonna withdraw. If they do would draw $1 trillion. I mean, that's going to be a huge shock, especially if you do it in a 1 month period. But if they do it in a 3 month period, then I would say that's fine, because that will make sense. They got to put the money back as to where they took it from. We all know it's a Ponzi scheme where they take money, they put it over here and then they move the money there and then they pay this person and so on and so forth. But we do know that Fed now is launching next month. They have been running tests and stuff. If you look at the Fed's Twitter page, it shows some of the tests that they run, and also that they are ready to launch next month. So that is definite. And if they do withdraw between 500 billion to $1 trillion in 1 month, excuse me, that can be a quite big shock for the markets in general. And I feel that Fed now, they're getting Fed now ready, so that if a liquidity crisis rises, as to where the market becomes liquid and the credit market starts to crunch, they can easily just print money into the system. And another good reason as to why I think it can also bring the market down is that, remember, she also stated this with that interview with Andrew on CNBC. She said there will be more bank failures, regional bank failures. If you want these banks to fail and merge with these big banks, you got to crush them by making them illiquid. Because as I showed you, I think it was in call number 2. Yeah, call number 2. I showed you how regional banks are holding billions, if not trillions, in mortgage-backed securities. That means for this past 10 years and plus, they've been giving out loans on close to zero interest. And when the Fed announced in 2021 that they're going to stop quantitative easing and start tightening with the interest rates, I mean, it doesn't take, and I mean this for them, it doesn't take them or a genius to realize that, hey, the party is over, we need to sit with risk management, and we need to sort out these loans or sell them at that peak period, and then sit with cash on the side. That's not what they did. They just pretended as if nothing happened. So that is why I feel that this liquidity crisis that's coming in the short term could lead to more bank failures. And of course, as we saw in March, they have to bail out these regional banks. But of course, they're not going to bail them. I'm pretty sure they're only going to bail out the depositors. And the assets of those banks are going to be sold off to big banks, as we saw with JP Morgan taking over First Republic. But yeah, that's my take. Anyone has another view or another, you want to say something and stuff?
I don't have anything particularly to say other than great job. That's some great information, some good insight. Thank you.
Cool. Anyone, you want to add a comment, or you want to ask something you're not sure of, or you want something, you want to know about something and you want more explanation about it?
Yes, hello?
Yes, Night Rider, I can
Hi,
hear you.
Sparks. I was just wondering, when you were saying that the markets are going to go down, does that include crypto?
Well, to be honest with you, I'm talking about Bitcoin, okay? With Bitcoin, as I showed you I can show it to you just now. As I showed you guys before, it is forming a heads and shoulders. it already completed the head. I think right now it's completing the neckline. Let me just quickly change my screen again so I can show you guys what I'm talking about. Share screen. Okay, so let me quickly go over here.
Okay, I gotta switch to the big screen.
Okay, so I did some doodling on the screen over here. I was just trying to see something. Let me just take it out. Take this out quickly. Okay, let me just put on my indicators on. Okay, so basically this is the Bitcoin chart for this cycle. As you can see over here, this is the shoulder part. Okay, here's the neckline here. This is the head, and as you can see, recently we came down a bit. So we're still forming the neck. So what we need, what needs to happen is we need to form a right shoulder. Now, I know JP Morgan did state that Bitcoin can go to $45,000. I do think that is correct, and I will show you why I think that can happen. If you look more closely over here, right over here, there is a gap over here. Now that gap was formed around 10th of May 2022. So that was last year May. As I stated, gaps always get filled. This is the CME chart, futures for Bitcoin. So what normally happens is with these gaps, sometimes they get filled immediately, or a couple months later it does get filled. Now, as you can see, we are in a bearish trend. We didn't even make it up. We barely made it up into the 50 period moving average over here. We barely made it up, and then we slumped back down. So usually with these bearish trends, a right shoulder needs to form. And now a right shoulder can even go slightly down, can move into the 50 moving average and come back down. If the Fed decides, okay, you know what, we're going to pump things, let's say change our plans, banking crisis is happening and stuff like that, we can go up and fill that gap. That is possible. But as I stated, heads and shoulders is generally a moving, is a bearish trend. So with Bitcoin, I can see it going down. It's taking its time, but it is ahead of the NASDAQ. As you know, the NASDAQ just started running up around April, with NVIDIA and Apple leading. Though I think all along with Meta and Microsoft. So Bitcoin is leading the tech stocks basically. So as you see, I'm going to explain this. As you can see, this is where we were in December, around that 16,000. We just moved slightly between the 23 moving average period over here. Then we came up because as we knew, Janet Yellen was they didn't pass the debt ceiling. So she said, you know what, let's deal with this nonsense in June. We're going to borrow the money from government retirements. And she used that to pump it up all the way over here. The thing that makes me, and I don't want to sound bearish, I don't want to be one of those guys on YouTube, but I just want to state what makes me to think that. Usually, if you look at the last 3 cycles of Bitcoin, usually it finishes or it from its all-time high, it normally comes down around 84%. So usually you are looking around 10,000. If I measure it over here with this thing over here, if I take it right at the top and if I measure it, okay, so 84%, let me just pick it up a bit, I'll stop there. Okay, give or take, you can see 11,500 to, you can see between 10 to 11,500. That's where it could be the bottom. So that is what I'm looking at. To be honest, that is my personal perspective based on what has happened in the past. And if you look at when Bitcoin bottoms out, when in 2017, after that bull run, it bottomed out around 3,200, and then it didn't just stay there. About 3 months later, it finished off at $14,200. So that is close to a 4.4 or 4.5x in just 3 months. That is how fast things can move in crypto, and that's how volatile the space is. So, as Brando has said, we do see a lot of bullishness in the third quarter. I believe that ChatGPT 4.5 is coming around September, October, around that period. So AI is ramping up, and then also we got the banking crisis, and we know that the thing that they use for Bitcoin to I don't want to say promote, but the thing that they use for Bitcoin, or the story that they use for it, is that they're gonna say, you know what, this is the time that Bitcoin was born for, when there's bank failures and such, and you're gonna see Bitcoin rise from whatever low it reaches. So that is my take on your question.
Thank you. I just wanted to add that I see that the markets, they've been keeping it the lowest at 25,000 Bitcoin, and the highest probably 32,000.
Mm-hmm.
And I think if it goes over 32,000, that's when the altcoins are going to start kicking in. But they've been manipulating the market. Now that you're saying it might go down even more, maybe because of Binance, because Binance got hit, so it's possible that because Binance was major. You're saying that Binance was controlling most of the Bitcoin.
You can't say that.
With trading, like when they do trading, like perpetual trading.
Yeah.
Also, what indicator are you using there? I saw it on your screen. I'm interested.
Okay, basically that's just a Fibonacci retracement. That's a color scheme that I've used. Okay. It's on any trading platform you can find it. Sorry to interrupt you while you were speaking, but just to let you know, it's Binance US that they're targeting. Remember, they don't want, and I've noticed this. I've spoken about it with many of you in the group. I've noticed how they are targeting US investors and stuff, and almost everyone in this, or every country in this world, has provided some sort of regulation or guidelines for crypto. And it seems to me like, okay, we know that they're doing it on purpose, but they are trying to make the US lag behind. So they are targeting Binance US because, remember, the SEC said because Binance is part of China, and that whole China and US story and stuff, US investors are not allowed to buy from there. So that's where Binance came up with a subsidiary and formed Binance US, where US investors can buy and trade and stuff like that, within the US region and stuff. And certain cryptos, or can the main ones are there. It's very hard. I notice it's very hard for US investors to buy cryptos on other exchanges due to KYC or it not being available. So you have to use VPNs and stuff. So what they're trying to do is that they're trying to cut off the US from this technology basically, and they are working together. As I said, it's not by coincidence that you did a Coinbase did an IPO. I think in 2021, you did an IPO. You registered. You followed the rules. You pay the administration fees, and all of that. And then all of a sudden, they come and sue you and say, "Oh, you were trading securities." Then you might as well sue every other exchange and every other bank that trade securities, and especially those who have stock. They own stock tickers, trading on the stock market. To me, that was absolute nonsense. But like I said, everything is planned out, and they are trying to cut off the US from advancing in this tech and stuff. So even if they do close Binance US, maybe Bitcoin can drop about 2K or whatever, but it's not going to be a big deal because of the liquidity is not huge. Binance, the main company, that is the big one. If that one ever, which I don't think it will, because it's backed by the Chinese government, and CZ has ties with the powers that be, so even if that falls, it'll probably get bought off by somebody, or the Chinese government might take it or something. But in any case, if Binance US has to shut down or gets taken over by another crypto company, it wouldn't be much of a big deal. As I said, compared to the users on the main one, it's very less. So yeah, that's my take on that point. And just to let you know that you want to speak, Brando?
Well, I mean, you're talking right now, so I'm gonna wait till you're done.
No, you go. It's fine with me.
Well, I just wanted to add, Binance US is they pretty much, the original Binance just gave them the rights to use the name and create that subsidiary. So, as we know, it's all planned out. I feel like CZ is a part of the narrative. Everybody's playing their role like a great film should be played by great actors. And, it like as you said, it's all noise, to keep U.S. investors out on the sidelines in fear, scared, don't know what they're doing, and causing ruckus just to perpetuate the agenda and to shift things forward. And personally, if I feel like if something major was going to happen to Bitcoin, it would have already happened, because the news struck pretty hard, but the market shrugged it off. And so even if it does, Binance US does go down, I mean, I don't really see that it would affect anything really, because as you just said, there's not too many people that buy on it. I don't even buy on it. I don't even really like using Binance US. I have an account, but I don't use it. For what? And I feel like when they made the shift to Binance, at first I was using it, but then they did something shady and they started blocking off certain investors from purchasing on there. And I feel like it was all done on purpose. I feel like it's just used. It was created in the purpose of setting up what we're seeing play out right now. Because they put certain chess pieces on the chessboard as pawns. It's like, this is chess, not checkers. So you put out a pawn over there, you put out a pawn over there, and you sacrifice them all for the main event, And I think this is just what it is. It's all a part of the plan. And for those who think, I saw somebody type in, "Oh, Binance is going down. This Raven protocol going down." Like, you got to ignore the narrative. The narratives are there to stir up the emotions in you to cause you to think like that. And granted, shit happens, There's certain protocols that, may have a little issue, but as we know, we're investing in emerging technologies, and stuff happens, and this is just the cost of doing business. And if we're savvy enough investors, we should understand that and not invest more than we are able to lose. That's my 2 cents. CZ for president.
Yeah, I fully agree on. I do agree with you. It is all a show, as you said. As you were saying, the elites play chess, and the people at the bottom sheep, they play checkers, because while the big guys are making the important moves, the sheep is worrying about stupid details and complaining about stupid details. Sorry. And just to show you that it's all being planned out, I'm going to quickly go over to CZ's account on Twitter, because there's something, I have shared it, but there's something I just want to show you, because he posted this on January 2nd, okay? And just to show you that the movie has been planned out, this is what he states on the 2nd of Jan. And he pinned it up on his profile, so you can view it too. It says, "We'll try to keep 2023 simple, spend more time on less things. Do's and don'ts. Number 1, education. Number 2, compliance. Number 3, product and service. Number 4, ignore FUD, fake news, attacks, etc. In the future, would appreciate if you can link to this post when I tweet 4. Now, when this whole thing with with Binance that started, with Silicon Valley Bank and stuff, he tweeted 4. And that's how you know that they are all playing a movie. They're all actors in this movie. If you look at Coinbase, for about 7 or 8 months, he's been selling coin stock, and he has ramped up his selling in the last 2 or 3 months compared to the other months. And his last dump was the day before the SEC could so-called sue them. And it's when I first came across the news, I laughed, because if I'm not mistaken, whenever you list on the stock market, you go through the SEC, you got to do your filings, as I said, your admin costs, that pay all those things. So it's absolute BS that all of a sudden now they're targeting Coinbase. I'm not saying it's the exchange, but it, for those who use it, well, it's one of those things. And if it was an illegal exchange to begin with, that means the government, when they want to dump on the Bitcoin price, they do it through Coinbase. So indirectly, you could have said, hey, if Coinbase is illegal, then why is the government dumping Bitcoin using Coinbase? As we saw in May, when they dumped about 10,000, I think it was 9 or 10,000 BTC coins, they did it through Coinbase because it showed on the whale alerts. So that is how you know that all these things are planned out. And for those who I'm not saying don't pay attention to these things, but it's nice to know when to discern, if I could put it in that way, or smell out what is just FUD, BS and stuff, and what is actually true. And by doing that, you would actually spend less time worrying about, um, what's being put there in the mainstream. Because we saw how, when the bank collapses, we saw how people were targeting CZ, and I'm not a fan of him. I'm not a fan girl of him or something like that. I use Binance, but it's just like, I just use it and then put it my into my ledger and stuff. So going forward, I suggest that try and keep your funds and your cryptos in ledger, and when you need to buy tokens and stuff, I'm pretty sure most of the tokens that we put out here in the group can be bought through dexes, like Uniswap and stuff. So what you do is you just connect your ledger, and you can purchase, and then you can just like move it quickly into your ledger at the same time. So it's not on exchanges and stuff like that. And then also in regards to even with the ledger thing, people were doing stupid things like taking a hammer and breaking the ledgers and stuff like that. That was so unnecessary, because if you read the clauses with that update, it was just an update that gave you the option of opting in and paying a subscription for the recovery program that they were having as well. Personally, I did the update for my ledger. I have the option of opting for that recovery service. I did not do it. And I didn't do it because obviously I don't want the government to, put a subpoena out there and say, hey, now we can take your crypto, confiscate it from you and stuff. So that is what people fail to realize in the space, is that they don't read between the lines, they don't read properly, they don't comprehend what has been said and stuff. And then you have all this nonsense and show on Twitter and stuff.
Yes, Sparks, can we speak to that? Because, we got to get to a point where we grow up. Because too many times in this group, their information is put out, people do not comprehend, and comprehension is a lost faculty. I think people just have no concept of what comprehension is when they read. They just read the headlines and they just run with it. As much ruckus was caused about this whole ledger change where you have the opt-in, it's so much unnecessary energy and time, all because of the lack of reading and comprehending.
Sorry.
No, I'm just saying we need to challenge people, because that should not be happening, especially in here. We have to get to a certain level of where we're investors who are not like the normal investors in crypto.
Yeah, I fully agree, because you see, guys, I know you're probably tired of hearing us saying that, but if you want to operate like how Brando operates, okay, when you going into investments and stuff, you don't just, as much as he can put something out there, you gotta read the clause and stuff. And it's nice to see some of y'all actually DM me and ask me, what, can you explain more on this and stuff? And I appreciate that. That tells you that, whatever I'm putting, whatever Wakes, Brando or Futures or someone in the group is putting out there, you guys are paying attention, and that is some of y'all, I would say. And when you invest, it's like a business, okay? I understand you got work, you got a family, you got kids, you got your own personal life, and sometimes it's hard to juggle, especially those who are working 2 jobs and stuff, because you're trying to keep up with inflation, trying to generate more money for your investments. But with that being said, there's something something someone said, and it's a very crude example, but since we're adults, I'm pretty sure I can use this example. And this is what he says. He says that there is no excuse as to why you should not be paying attention to your investments or even look at a chart or something. If you got time to sit in the toilet and do your business, then you got time to whip up your phone while you're doing your business and look through things and read through things and stuff. So and he's right. I have to fully agree with what he said, because sometimes, okay, I don't want you to picture me in the toilet, but when I do use the bathroom, I do go through stuff while I'm sitting there. I'll scroll through my phone and see what's going on and stuff. And just to let you know that you need to make time, you need to go through your investments. You know that in this space, even if you miss a day, it's like missing a month, because a lot happens. This space is forever changing and stuff. So with that being said, you need to pay attention to your investments. For those who are business owners, you wouldn't just leave your business and say, okay, it's going to run on its own. No, you got to go behind the workers, make sure they're doing their job. You got to check stock. Do we have enough stock? Has stock, inventory takes, have you checked your inventory and stuff? Are the bills paid? What are the expenses? How can we cut on this? How can we maximize profits? Is our customers happy? Same thing with investments. You got to check. And of course, in this space, like especially with investments like DAV network, they don't update you. But if you do your research, you can see. But with those who give constant feedback, you got to see who's the team members. Are they doing the job? What are they doing? And stuff like that. Don't worry about price action. When utility kicks in, price will do its thing. There's no doubt about that.
But Sparks, I'm not patient.
Huh?
I need to see stuff. I need action. It's too much.
Yeah, and that's why I'll repost it again. But last year I posted a book by Robert Kiyosaki. It talks about the mindset of an investor, and I was fortunate to read that book before I came into crypto, so I understand more or less, what to expect and stuff. And that's how you need to look at things. Instead of worrying about price action, you need to check up on your investments. You need to see, hey, is there any updates? Do I need to do any, what they call this thing when they change from one network to another? Those things. Because some of y'all, I'm not lying, some of y'all came after 1 year and y'all want to do, y'all want to change like your block V tokens that's supposed to be on ETH. I mean, it is available on Poly, but I think there was an issue with V being on Poly, with the staking and stuff, before this whole staking nonsense with that took place. Some of y'all had your V on that and you wanted to do staking, and you guys didn't know, what to do and stuff. And when it came to other cryptos where y'all had to do swaps and stuff like that, and they closed off the swap dates, you were too late. You didn't pay attention. Like one
and then
person
they want to get
not,
mad at us.
Yes, and one particular person had their AGI, not AGIX, AGI tokens, and they closed that contract address. Now he lost his AGI tokens because he did not change it in time or did not swap it for the AGIX token, which is the new token that's going to run the utility of SingularityNet and stuff. So guys, I don't want to fight with anybody. I know maybe sometimes I sound a bit rude when I'm typing in, but words can be misconstrued via words on the internet, and because we're not speaking it and there's no face. But just to let you know that we try to help you and stuff. But sometimes, since we're all adults, we need to do things or try to do things on our own. If you have tried it on your own and it's still not working, then sure, I'm happy to help. No problem. I got no issues with helping you. But sometimes you need to grow up, if I can say that.
She
And
really
then
wants to say, get your head out your ass. Okay? Because I don't understand it. If this is life-changing opportunities and you're not watering your flowers every day, then crypto in a serious way is not for you. Maybe you might just want to go and invest in a meme coin and hope it goes up. Because what we're doing over here is serious business. This ain't no play. This is serious business. So you got to move like it.
yeah.
That sparks thoughts.
Yeah, so basically, and it also helps, with also play around with things like DEX. Get to know what a DEX is. We're not sure. There are plenty of YouTube videos on what a DEX is. You can read it up, or you can watch a video. But basically, a DEX is where it's decentralized exchange where you can connect your cold wallet to it, buy a crypto, and you can send it straight back into your cold wallet. So that the whole purpose of not your keys, not your crypto, that sort of thing, that comes into that. Keeping it on exchanges, if anybody, for God's sake, is keeping the crypto on exchanges, may God be with you, because we've been singing the song throughout 2022, and we saw multiple exchanges go down and stuff. And the whole thing, as even we saw with Binance. I mean, we saw the outflows with Binance. What does that tell you? That people in the space do not learn. If you got your crypto in your cold wallet, you can sleep peacefully like a baby. You don't need to, all of a sudden you get news about a certain exchange going bankrupt or having issues with the SEC. Okay, I'm sitting now 1 o'clock in the morning trying to get my crypto out. It's taking too long and I gotta pay so much fees because of the number of transactions that are taking place. It avoids all of that. You save money, you save sleep. So, with that being said, is there anybody else that would want to ask something or say something in regards to what I've said, with the stock market and such? You're free to comment or ask.
Can I ask questions about investments fund, or only about Nasdaq?
No, this is not the question, time, and answers for the investment fund. We'll do that call on Saturday, and I'll make a post on the Patreon and elsewhere announcing that.
Yes. Just to let you know, this Saturday we are having, I believe, with Brando and Sean, we're having the AMA in regards to the BTR Investment Club. So save all your questions, write them down, and save them for Saturday. Please do not message me. If you're not sure about something, and you still want to ask, speak directly to Brando, or rather just best save your questions for Saturday, because that's where everything is going to be answered, and that's where more information will be provided as well. So anything else in regards to the markets or anything that I've spoken about before in regards to the markets and stuff, do you want to ask any questions about that?
From now Nobody talk directly to me. You talk to Sean. Sean, you talk to me. You got it? No, that was from Frank Lucas movie. But yeah, American Gangster. But yeah, you can just message Sean directly, not me, about that. And yeah, but we'll answer all those questions on Saturday if Sean can't answer your questions directly. Is that fair, Sean? Yeah, it's fair. I answered for him.
Okay, so does anybody... Oh, sorry, Sean speaking. Go ahead, Sean.
We couldn't hear you, Sean. Maybe something wrong with his microphone.
Okay, so does anybody else have any questions in regards to what was said on the call early on and stuff? Something that you want to find out, or you want to comment on something? You're free. The floor is open. Okay, so I'm taking it. Nobody wants to ask anything. Okay, going once.
I'll ask you, Sean. Sparks. So, how do you feel in regards to utility cryptos on the rise, starting in 2023, leading into 2024? What's your thoughts on that? Do you see certain things taking off other than what we normally talk about? Do you see things coming to life that have been dead?
Yeah. Okay. I see. Like I know AR and XR and VR is bullish, but I feel like this is the, and I know you have said it, but this is definitely the year for AI. And my main reason as to why I would say that is that with all these bank failures, number one, with all these job losses that's going to take place, as we can see with big Fortune 500 companies like McDonald's and all these traditional stock market companies, they are utilizing robotics. I also see I'm very bullish on the SingularityNet ecosystem, with what they are rolling out this year. And I also see the bigger picture as to what of how it will play out and stuff.
Sweet. Well, great job. Great call. Learned a lot.
Cool. Thank you for that. So, okay. So going once, going twice. Anyone wants to ask anything? Last chance. Cool. Okay. So nobody has any questions or comments. Okay. So thank you guys for being on this call. I really appreciate it.
Wait, I have a question. Sorry, Sparks.
Sure.
Yeah, I have a question. Do you?
Sure.
My bad. When do you think the Fed's gonna pivot? Like, do you think it's gonna be the end of this year or the beginning of like Q1 next year?
I would say, okay, let me just open up my CME futures over here. Okay. Based on what the current CME futures look like in terms of Fed rate hikes, okay, it looks like a pause is definitely going to happen next week. Of course, these things can change about a day or two before the meeting. So what I say now can be wrong. So that's why I don't predict stuff, because the way they change things is like they change the underwear and stuff. So I see that they are going to do a pause this month, and the main reason for that is that they got this TGA, the Treasury General account, where they are withdrawing liquidity from the stock market. So you can't raise rates and withdraw that amount, like 500 billion, at the same time, because that's going to have a real negative, what you call, impact on the markets and stuff like that.
So where's that money going?
Into the general account, because they need to pay their bills. Biden needs to buy more ice cream. Sorry for those who do.
That's a robot right there. I don't care what you say. Have you seen the stuff that he does? Like, how can any human being account for that?
I think the latest one is when he fell. I think one of the officers went to greet him, and then he turned around and then he fell. That was a bit funny, to be honest.
But I just don't understand. He even was supposed to do a certain thing at this for these Navy or something. He's supposed to receive something and shake their hand, and he just walked right up, took the thing, and then walked right back. Everybody was looking at him like, what the hell? Listen, this is what they're doing with him. They get a kick out of it. That ain't no real human. If you look at the first Biden versus now, this is the technology we're investing in right here in front of the people. Anyways, I digress.
Yeah, so to be honest with you, just to let you know, guys, I'm apolitical, meaning I don't take sides. I don't vote, never voted, never will. So if I do say something about a certain politician and stuff, please don't kill me. If you are, rooting for those people, that's your opinion, and this is my opinion. And we all are entitled to our own opinions. But going back to what Elite Entity asked, so I basically do see a pause. Most likely, judging by, again, CME futures for July, they also want to do a pause. But of course, that can change as well. So it all depends on the Fed. But we are going to see a pause, because it's honestly, if you think about it, you can't raise rates and then also withdraw that much money as well. It's very destructive. So that's my answer to your question.
Oh, okay. Yeah, that's good. I like that. Yeah, I see that a pause coming. But do you see like a return to like how we had like that liquidity injection, like end of this year and next year, like where they'll like literally say, all right, we need to cut rates again due to like the banks failing, or like the Treasury General account being filled with trillions of dollars, as you say, and that affecting the markets and risk assets, like stuff like that.
Yeah, remember, in order for them to pump so much of liquidity, they have to create an emergency, as Greg Manarino said. And he's so right on that, because look how they kicked down the can for this debt ceiling. And then look at how banks, the regional banks crashed. And then they wrote, imagine you raising rates, trying to fight inflation, but then at the same time you pass a bill that will save depositors cash. For those who believe in what the Fed says and does, that's a question mark over there. But that is why I think that they are going to withdraw this liquidity, because they need to create a crisis or a reason to pump money again. So by withdrawing this liquidity, you're going to create a credit crunch. You're going to see regional banks fall because they can't survive in this high interest rate environment due to the amount of loans, mortgage-backed securities that they have. And as I said, big banks are actually selling their commercial loans at losses because they know what's coming. So I think that this liquidity withdrawal that they're doing is going to create a reason to pump money back into the system. And I think that they are going to use FedNow to do it because it's new tech and it's part of where we're going, fourth industrial revolution. And also it's quicker, you can move money quicker into these markets at a fraction of a cost. So that is what I see personally.
Okay, copy. Well said.
Cool. Anyone else before I close the call? Okay. So thank you guys once again for joining me on this call. I really appreciate that you guys, take time from work and stuff to listen in. And thank you for your support. And next week, Friday, I will be doing it on. I will go back to doing it on a Friday. It's just that this week I have an engagement to attend. So I will see you guys next Friday. Thank you so much, and I hope you have a wonderful day. Thank you.
Thank you.
Thank you, Sparks. Great call.
Thank you.